Hello and welcome to another update video about the DXY. Yeah, the DXY, the dollar is still working here ideally on a top. So ideally the top is already in. We're tracking currently the potential downside that we've been waiting for basically. So the idea was that somewhere here the DXY should form a top. And we're going to take a look at that now. So overall, for anybody who has been watching previous updates, the idea is that the price has been coming down here in an A wave into the February lows, February 23 lows. This looks like a flat correction in a B wave, and we now likely come down in wave C. I'm leaning towards the idea that the C wave has already started, but I cannot rule out that the B wave extends a little higher. We're going to talk about the key signal levels in this video. The C wave eventually should take us down to the low $90 region. We can calculate that by using the Fibonacci extension tool. We take the length of the A wave, we go to the high of the B wave, and then $94 is certainly a target to watch, the 1-to-1 ratio. Now in a more bearish scenario, but that is not really needed at the moment because, we won't know probably until, maybe in a year's time or so, if this is what's playing out. This could also be a wave 1 to the downside, A, B, C in wave 2, and then a third wave to the downside. However, I prefer the ABC structure due to the larger chart context. Nevertheless, the focus is on the downside. Yes, there has been a rally and the dollar is strong. However, it is basically looking as if it's topping here. This is a flat correction. And in this flat correction, while this B wave could move higher, it has now reached a point where a top could be in because we had a break out of the trend channel and we start to see lower highs form. So let's zoom in. The idea is now that this move up is finished. That's at least the current thesis. Why? Because first of all, we rallied into resistance. The Fibonacci targets worked, the extension targets worked, and the resistance levels, basically the retracement levels. In addition to that, from a wave count point of view, the subwave structure showed a pretty full wave count. And we've seen a potential wave 1 to the downside, not impulsive, which makes it a bit ambiguous. But nevertheless, we had enough waves to count a wave 1 to the downside in a leading diagonal of wave 1 of 1. Now we had a rally into resistance and reacted to resistance already. But it's not clear enough yet if the wave 2 of 1 has topped. So what are the signal levels? So I have to say a sustained break above $106.95 would rather emphasize trend continuation higher, okay? So that's of course still possible. Not what I'm leaning towards, but again, the market doesn't really care about what I lean towards. The parameters are clear and the trend can certainly push higher. The uptrend is not clearly broken yet. And therefore we have to consider trend continuation higher. When does the uptrend break? So for me, the very first and earliest signal level to the downside that would confirm that the downtrend has started would be a break below $105.53. It's the wave 1 low. Then further levels are at $104.68 and then a very important one at $103. So, however, at the moment, we're sort of still in the in-between space between, okay, are we breaking the uptrend and are we coming down, or is this potential trend reversal to the downside just now failing, and do we extend a little higher before we break the trend? So either way, I mean, this can still extend a little higher, but I'm now watching for the first time in a while, really for a top. And this is a realistic chance for the bears to take over here, but it's not crystal clear yet. Okay, so topping and bottoming, they're always processes. It's not that someone up here rings a bell and says the top is in. We can only really wait for it. We can identify the levels the price should reach. Then we are watching for rejections or reactions. If we like the reaction and if it's confirming for a top, then we look for further evidence. And I told you the key levels to watch. And what we need to see And with each of these levels broken to the downside, the probabilities for a top in place increase. And then for a trader, the question is always, okay, how much confirmation do I actually need as a trader? That's different from the analysis. But yeah, so from an analysis point of view, it's all about confirmations and stuff. Whereas for a trader, it's more like risk and reward. So yeah, but yeah, this is all I can say really. So we need to remain a little bit patient. And the key levels to watch for the next few days are certainly $106.95. And then also the recent high at $107.31. It's actually 33. And the wave one lower here at $105.56. Yeah, that's my view about the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you like to get daily updates about the S&P 500 and selected stocks, then check out our new S&P and stocks and shares service. You can find the link in the description. It takes you to Patreon, and then you can check out which stocks are included. Thanks a lot for watching. Bye-bye.